Yo, what's up? What's good, boys? Haven't done a recap in a minute, but we are back at it. Going to do a real quick one today. But yeah, man, let me get rid of all this. Let me show you proof real quick. So, did not trade on my funded accounts today at all. Going into the end of the year this week, having the bank holiday yesterday for the first day of the year, the New Year's. I did not want to take the chance of trading on my live accounts, so just trade all my evals today, my 250k accounts, and made 931 from it. So up still pretty decent on the account, slowly but surely. But yeah, never took anything on my evals or my funded accounts. As you can see, nothing was taken. So with that out of the way, we had unemployment claims today at 8:30. So expecting it to be possibly decent. So actually willing to take a trade on my evals because I haven't taken a trade in like 2 weeks, I believe. I haven't taken a trade in 2 weeks, so going to market pretty ready today. Excited and seeing if I can find any very solid opportunity, very obvious opportunity. So going in today, you see that we formed SMT overnight at the prior day high, right? So this is time-based SMT. This is what I talk about all the time. It's very important. Time-based things are very important. Okay, so looking at London high, London low, prior day high, prior day low, prior week high, prior week low. All this stuff is very important when it comes to liquidity and SMT for the manipulation. So SMT at the prior day high, we have very obvious Asia lower here, 7:15 p.m. Okay, and then you see all this like engineered liquidity right here, right? These very smooth lows right here. Okay, so this is, again, time-based liquidity during Asia. No, this is not really time-based liquidity. This is just Asia lows, right? And this is time-based liquidity right here. This is very obvious London low, all right, as well as, let me get rid of these, as well as this obvious range, right? What do we do all night from the open, right? The open's right here, 6 p.m. Okay, we ran lower, it's random dump. What do we do right here? What's this though? This is an obvious range. Okay, we're literally pumping from the time pretty much we open, right? So it's a very obvious range that's really unbalanced when it comes to liquidity. So there's a bunch of rested liquidity down here, okay, right? And what we see is London run higher, form this SMT, and then before market even opened right here at 8:30, we have price inverse this first and 15 SIBI. All right, so we inverse this first 50-minute SIBI right here. Market opens, we run higher, right? I'm anticipating this to be a failure swing to this protected high during London, right? So when London manipulates, like I always talk about, when London manipulates, what do you expect? Right, New York to distribute. Okay, so this is exactly what I anticipated, right? So London manipulated, price ran lower, forming this 50-minute SIBI during London. What do we do when market opened? We retraced. But keep in mind that we failed to swing this protected high. So this is very, very bearish for me, right? We ran up to this 50-minute SIBI, market open, tapped into it, right? And bodies closed below it. All right, so this is just very, very A+ for me, right? We have all this liquidity down here, and this is the liquidity that I targeted in the trade, and then the equilibrium of the overnight range, right? So I hopped on a 1 minute. And I ended up taking this. Let's see if I can pull up the MNQ. Alright. And this is what I took right here. So, we had the London SMT at the prior day high. Alright. And then, going into New York, 8:30 right here. 8:30 open. Okay. What do we do 8:30 before market open, right? We accumulated a lot, right? I don't want to see price return up here. And why is that? Because we have a protected high. We have the manipulation already set, right? So I don't want to see, if we are truly bearish, I don't want to see price return up here, okay? So with that being said, we accumulate before with buy stops and sell stops. Market opens, we clear out sell stops right away, right? This is a little accumulation here. We clear out through this data low and through this data high, right? Forming these very obvious wicks. Typically, traders will place, when they first enter off the market, when it opens off of news or whatever, they'll place their stop losses above and below these areas based on whatever their bias is, right? So data low, there's a lot of stops down here. I talk about this all the time. I'm not gonna name it up. Okay, so you get price from a data low, data high. What do we take out first? Okay, we take out the data high, right? We take out the data high, and we also trade into this very obvious 1 minute SIBI. Okay, so that's just an extra thing. Don't really look at that stuff too much, but very obvious SIBI right here. Took it out in premium, and then what is this? Minor buy side liquidity, right? This is internal buy side liquidity. Holy shit, I need to move this out of the way. All right, we took out minor buy side liquidity, failed to swing the protected high, and we begin to see a rejection lower, right? And now I'm starting to trade only macro times, just because I've realized that the majority of my trades that I take, looking at data, the majority of the trades that I take already are during the macro, and a lot of the trades that I do take and I lose are not during the macro. So it's based on your model 100%. Not everyone's model can do the best during macros. But for me, I've back tested a lot over this past month and made sure that macro trading would be the best for me, and it really is. So going now into this new year, trading only macro times. So no low time from SMTs formed anywhere in here though. So that's not really on my mind though, just because we have this high time from SMT that was just formed not too long ago. Minor buy side swip. We have an extra manipulation leg sweeping again this other buy side level before the dump initiates, right? And I'm marking out 845, and the reasoning for that is because, I've watched this YouTuber, and he got me into macros. Saw his video one day, and it was my For You page, and it was talking a lot about how good macro trading is and all this stuff. And he trades macros every single day, shows proof and all that, and it's great. And I started watching him. I don't really watch a lot of technical analysis videos, but I watched his, and all of his moves were extremely clean. All he would use is fair value gaps and inversion trades, and he would just trade during these specific times. And he had a very good point of saying, yes, we all know that macros are the first 10 minutes, or the last 10 minutes of an hour, an hourly candle, as well as the first 10 minutes of the hourly candle, right? So macro is going to be actually 8:50 to 9:10, right? So it's a 20-minute window. But he had a good point in saying that if there is a very solid setup that you trust in your bias a lot, you trust in the setup a lot, and it happens 5 minutes before the macro starts, so 8:45 to 9:15, you have a 30-minute window, and those are the only times, I don't care if it's 1 minute before, those are the only times that you trade out of the entire day, is these specific macro times, which for me is, four macro times I can trade a day. Right, I'm not taking it. If it's outside any of those times, I'm not taking it. So having 5 minutes before and 5 minutes after those macro times to take trades, if I'm very confident in it, that's great, right? But getting back to the point, right? Data low, we have all these smooth lows down here, right? I ended up targeting this lower here. I made the mistake of doing that because I didn't really. I just wanted to get in and out of this trade, to be honest, today, because I wasn't super confident in the best price action due to all the other stuff. Bank holiday and everything yesterday, and it being, pretty much the last week of the year. And next week being the full, whole week of the first year, or first part of the year, right? I'm tweaking. I'm tired. Right, so this is the short I took. I missed this first inversion, which was the best in my opinion. Did not short this because, my model, I need to see 5-point closure below the inversion. It's just the way I trade. It's the way I've, done it for a long time. So didn't enter short right here. Ended up running higher. Very clean right here, bro. Very clean. Look where we retraced, right? This is A+ setup, right? Tapped into the consequent encroachment of that 1 minute SIBI perfectly. Inverse gap, missed the trade because the first 10 seconds of us opening this new candle, we just dumped, right? So I'm not going to chase price. I need to wait until about 20 seconds-ish until the candle closes in the 1 minute for it to be, a decent close for me to trust. Okay, price is, when I enter, price is not going to run back up here and close above it, right? Above this and validate it still as a respected fair value gap, right? So I need to wait. So I didn't trade this. It dumped too far away from me, for my liking. So enter this trade instead, right? So short right here, actually right here, short right here, stop loss at this high, right? The last candle close, right? Looking at it now, I should have placed, I think I might have placed right here. I don't know. I might have placed right here because we have a little fair value gap right here as well. Okay, doesn't matter, right? So then right here, put my stop loss right here, up here, and then take profit down here at this little sell side level. Stop loss to break even was actually right here at this low, this little sell side point right here. data low. It was just nice to see price inverse it, or not inverse it, but strolling close below it. That is a very nice confluence, but didn't put stop loss to break even until we hit this little sell side point, and then as you can see, hit full take profit. Rest of the day didn't really do much. We ran all the way down to Asia low, formed no high time frame bullish SMT or low time frame bullish SMT at these lows at all. So during this macro right here, I was willing to risk like $100 off the eval. But as you can see, that's not the model, right? There's no high time frame or low time frame bullish SMT that would validate a reversal right here to higher prices. So I stayed out for these longs, even though, yeah, they look nice. All we did at the time, it looked like we just engineered sell side at the Asia low. So that's very risky trades. I didn't take it. The only trade that actually made sense for the rest of the day was this short right here. But it was outside of macro time. We formed some like a little small minor SMT at these highs right here and right here. We got a nice inversion right here out of entered shorts, targeting this sell side point right here. Right, so a little 2R trade. Obviously didn't take it again because it is outside my macro time. 100% okay with that. Got my piece of the pie today, and I'm 100% fine with that, right? And yeah, man, hopefully y'all got something from today's video, learned something new. If y'all got any questions, leave them down in the description. If you want to join the Discord, that will all be left in the description as well. Completely free, banger ass community, bunch of guys. We're constantly updating it with new stuff almost every single day, always live in there. So if y'all want to join in there, be a part of the community, and continue to grow, we'll be down in the description, man. I hope y'all have a blessed day, and I'll see y'all tomorrow. Peace out.